Welcome back to HSC AMA. I'm your host, Julian Chinsky, joined by Rishi Sharma, West Coast lead at Newlin Ventures. Could be more excited to feature you, Rishi, yet again in a new format. And what's unique to all of you joining about Rishi is that he has 17 years of operational experience being a founder, actually, which is very, very rare those days. And then transitioning to the VC world. Welcome to the show, Rishi.
Yeah, thanks for having me. Really appreciate being here and happy to answer questions this morning.
Let's do it. We have a bunch of questions here. Question is number one. How does funding climate change from 2023 to 2024?
Yeah, so I think it's a bit of a changing situation. I think the year of 2023 ended on a downward slope, where it was pretty difficult for a lot of startups to get funding, unless they had leads already in place and then they tried to close it before the end of the year. The beginning of the year for us was a little bit more optimistic than we thought in the first couple of months. But most recently, with some of the numbers that have come out based on from the Fed, I think some people are pausing, some people are moving forward. There's some talk that rates may go up, and so that might dry up some funding also. So it's a changing market right now overall, but I think it started off more optimistic than people anticipated at the beginning of the year.
We had a lot of questions. I'm just trying to logically kind of segment all of them. But a lot of people are asking basically which areas in emerging tech are you most excited about?
So for us at Newlin Ventures, we like to invest in areas in which are highly underfunded on a cyclical basis. So that's, future of food, that's anything around, consumer right now is an area that's underfunded appropriately. And then we also do a lot of investing in insurance tech, another area, compliance software. These are areas that deep tech is another area that we're looking at, and things that can enable the new industrial manufacturing. And then also emerging markets. So we do a lot of investing in the Americas broadly. And so we like to go into these categories where we feel not only that we can add additional value, but two, we can be there for the long term. And then as a result, our reputation and value that we're adding kind of endures long term. So that's the way we look
Next question. Here's a funny one. How does someone get into becoming a VC?
at it. Part of becoming a VC is part of the, I guess, the way of breaking in is just kind of just there's multiple paths. Everybody's path is slightly different. There's a lot of people that are coming at later stages from private equity and iBanking. So if you are looking at a later stage style thing, then those types of career paths are generally fairly good. At the early stages, I mean, I think if you can, founding operating experience is always a valuable way, especially if you can network with your portfolio or you're a portfolio company of a fund. Generally they can help to along that way. And then I think another great way is just like being an angel yourself. And if you can essentially get to a point where you can start to invest in friends and family rounds or angel rounds in companies, develop a portfolio, and start to then move into doing SPVs, and then from there either join a fund or start a fund from there. So,
How can revenue generation pros protect themselves from the overinvestment followed by crazy expectation followed by a layoff cycle?
yeah, so I think this is one of those things that I think a lot of people um, need to realize what venture dollars actually mean. And what venture dollars mean is when you're taking it, there's a certain level of expectation that goes with that. And then you are kind of signing up for a particular path. And so I think if knowing that you're signing up for a path that's highly volatile, highly risky, so there's certain things that are just inevitable in regards to the ebbs and flows of a market cycle as a result. And if you are kind of looking for something more stable and enduring, I mean, bootstrap companies out there or companies that have taken very little capital, have built a capital efficient business, maybe a better fit appropriately for certain individuals. But I think there's some things that kind of just go with taking venture dollars that you can't avoid.
What are the shifting priorities of VCs in 2024?
I think the biggest thing is just it's the same things that are consistently making sure you're managing your portfolio and providing the support that they need, and helping them to get the next round of funding, um, and or whatever asks they're requesting. And then the second thing is, finding the best companies and supporting those founders. Um, sometimes and then building deal flow pipelines that are kind of coming through as well. So it's the same basic things that are kind of continually enduring. It's just a matter of which ones you're putting more lever or more power behind at any one time.
What advice do you have for entrepreneurs looking to fund and scale their idea?
And for me, I always look at an idea when I'm doing it as a founder, or companies I advise. I think the biggest thing is just customer validation, really understanding the customer. So it's basic stuff, doing the things that kind of every generic startup advice will give you. To essentially validate the product, really understand the industry that you're going into, get the qualitative things, do the things that are unscalable at the beginning in order to just like understand how you're going to implement it. I'm a big believer in the job to be done framework. So go read kind of Demand Sales 101 by Bob Molesta, great book. And I think those are just like the basics that I go after.
Question for me, Rishi, I was just kind of watching a couple of videos from different VCs, like their advice on fundraising and stuff. And the funny one, and I'm curious your thoughts on this, just came up a couple of times, basically a VC sharing, how you should radiate success and you should be like dressed a certain way, look a certain way, take a vacation, look rested, successful, stuff like that. I was like, okay, well, like if you have a founder that looks successful and rested, I think you've got a bigger problem in the early
Yeah.
stage. So curious your thoughts on this. And yeah.
Yeah, I think it depends on the brand of the company you're building. So it's a little bit more nuanced. I think in most cases, I wouldn't say that's a good attribute or a good signaling, but there are certain industries where kind of having a brand positioning in a particular way may be quite helpful, especially some things maybe on consumer, maybe on possibly like HR software or some sort of corporate wellness software, maybe kind of embodying what you're kind of selling makes sense. But I think overall, I mean, it's running a startup is not for the faint of heart. It's incredibly difficult to build up the inertia, scale a team, personally develop in terms of like moving on, dealing with a ton of failure and rejection. The idea that going through all of that you could feel and look rested and super successful and not dogged is kind of a very hard thing to achieve. So I think it's something that I would look for is who that person is in private in the meetings that I'm having with them, but I'm not. I do agree that you should tell your story and you should tell what you're doing, and I think building in public is a real value add. And so I think the more that you can do that once you have a product that you're ready to sell and or build a community around, the better. So
What are your personal kind of no-go signals in founders, in startups, based on your experience?
can you just repeat the question one more time?
Yeah, like any signals or I don't know, like kind of features could be in founders, could be in startups, in the way they think, in the way they operate, or anything that just tends to show that it's not going to be a good fit for you based on experience, failures, wrong
Yeah, so
investment.
yeah, I think just generally I think it's the biggest thing for at least me personally is kind of like communication style. That's like a big thing for me personally. If I can't clearly communicate with you or understand kind of the way you communicate, it's going to be very hard for you to recruit the talent required to build something that's large. It's not saying that you can't improve on that, but sales is a lot of the game early on. And so I think either yourself or the co-founder, other co-founder, like somebody on the team needs to have a very clear communication skills. And it doesn't necessarily mean it's on a call. It can be through writing. It can be through other ways. But that's like a big one for me. And then I would say another one that I look to is also like track record of the past. Like, have you always done certain things in your past where you are can show some sort of knack of entrepreneurship or resilience? Um, and so those are the kind of big things that I'm looking for personally. And then follow up is like a big thing. If a founder's not following up like after a call based on things we discussed, then that's a no-go.
Next question. Which GTM models are most effective? Pretty generic, but
Yeah, I mean, like, I think we talked about this on a previous I think these one of the games that we did. I think it really just depends on the company and the market you're going after. So there's not just like one generic approach. I think you have to know the market. Are you going SMB? Are you going vertical SaaS? Are you going enterprise? Is it a relationship business? Is it a transactional business? I think it requires taking into a lot of factors, and then your positioning within that market. So it's not just one particular strategy or framework that are out there. I mean, there's a ton of great books and content out there that you can go watch. I'm sure if you watch a lot of the other replays of some of the games that have already been played, you can probably learn a ton on what everybody's thoughts that have thought leadership. But I think just diagnosing on a first principles basis the target market that you're going after and who that ICP is going to tell you a lot on how to approach it.
do you think the IPO market will make a comeback?
Again, this goes back to the macro environment. Like if interest rates start to increase a little bit more, I think the market will start to close. If we start to get to a position of where the market and the rates stay flat and or start to get cut over the next 2 quarters, then I think you'll see a widening and opening of the market where more companies will go public. And then also like if this Reddit IPO does really well, that's coming up, like that does well, then there could be that inertia of a company that size and whatnot might be able to open the gates further too. So we'll see over the next quarter and a half on kind of where the market's going.
What's the biggest moonshot you ever took or invested in?
As an investor, I've only done it for a short period of time, so I can't stake claim to say that I've invested in something that is so massive of a moonshot yet. I don't have that honor yet. In terms of starting, I think the first thing we started on was my first company. We developed some interesting IP around it, and it was around essentially using wireless charging protocols to integrate it into clothing, so you could wirelessly charge your devices like without it. And if you just think about that problem in terms of heat and heat, let alone like battery life, reliability, just like everything that's required into that, it's a pretty large shot that we tried to take in that.
What do you think of the value of accelerator programs like Y Combinator and Techstars?
Yeah, so I think they're valuable. I think if you're a first time, myself, I'm a mentor for a few of these accelerators as well. So like I think that the value comes from your ability to be, if you're a first time founder, to just have somebody that can place in an organization that has your back, and can kind of walk you through the steps as you do it and help to build a community around what you're building. And then the other value add is they are great signaling devices for investment if you're looking to raise money. They generally will have a lot of like investor relations programs where we're well connected with the local community or the broader community, depending on which organization you're with. And that can help in terms of just getting you to the next stage appropriately after. let alone, advisors. I know a couple companies that actually met their co-founders after joining one of these, like they added a third co-founder appropriately too. That's a common story as well. An advisor that's working there ends up being a value-added co-founder. So I think they can be incredibly valuable resources for first-time founders, lesser so as the multiple times you've been a founder, because then you've built already a network and relationships that maybe you don't need that as much. But for first-time founders, sometimes second-time founders, it's a great place.
What inspired you to leave operations and go into the venture space?
I think realistically, I think it's a couple things. One, I think after you work for so long on a particular thing and you sell a company, which I was part of, to be lucky about selling my last business, you look at kind of what do you want to do next, and you want a different adventure. And then also, I just at the time I didn't see anything interesting that I wanted to go do and had an idea or I wanted to operate on. And so as a result, thought I'd try out this investing side, try the other side of the table. And I've grown to enjoy it, especially the mentoring part, and really helping people in the LA tech scene kind of scale their businesses appropriately. So,
Or your mentors?
yeah, so I have a couple. One, yeah, I think it's a common multiple. My parents were also tech entrepreneurs, so parents obviously set a great model for me in terms of what's possible. And then I'd say another individual was Keith Oldridge, was a mentor of mine as well. And then another good friend of mine, Amar Durrani, who actually more from a business and leadership perspective with his story, rather than because he's in logistics as a major problem, but just being able to decipher things, build a company of the scale that he's now starting to build, like, is pretty incredible with his life story and his background. And so he's been a great mentor for me in terms of just leadership.
Here's a fun one. Who do you think is a better entrepreneur? Jeff Bezos, Tim Cook, or Elon Musk? And why?
Well, I think one of the three doesn't deserve to be there because he joined as not as the entrepreneur. So Tim Cook is not technically an entrepreneur; he's an intrapreneur. Just a small distinction there. But was incredibly obviously successful to Apple's resurgence over the course of the last 25, 30 years. I think between the two, the real question is between Elon and Jeff. It really depends on kind of what you're looking for. I think they're both obviously great entrepreneurs, but me personally, I marvel at what Jeff Bezos has been able to do with Amazon over the course of his duration. To essentially take so much of just operating a business that are potentially cost centers in a business and then turn them into actually possible profit centers or break even on the balance sheet, and P&L is just like incredible work, and then creating a culture and a way of doing things. I think Elon, a lot of the stuff that he's done is amazing and fantastical, and I think he's oftentimes said like he's the only one that can do it. And I think the tell of a great entrepreneur is one in which like there's a systems thinker and you can constantly, other people can adapt that and carry that kind of best practices and like move it into their organization and see if it works. And so it's more scalable. And so that's why I kind of lean more towards Jeff.
How did you get connected to the current VC firms you're involved in?
So yeah, I mean, it was just kind of through networking events, conversations, reading about people, reaching out to them, cold emails. That's kind of basic networking 101. You meet somebody through somebody, ask somebody, you see somebody, you follow at an event, you talk to them there, you follow up, set either a Zoom or a coffee date to go talk to them. Sometimes, they have a newsletter, you're replying, you're commenting on what they're having to say. and then you pull that into like a long-standing relationship with somebody. So it's all the basics of common networking to get you out there, try to add value where you can, give before you can ask, all the basic stuff.
Question for me. Do you think of becoming founder again?
I think if something compelled me enough as an opportunity for me to get back in the seat, definitely would go do that again. I'm not saying no to anything. It's just the opportunity and the idea has got to be something so compelling for me that I'm willing to take that gamble.
And then the second question, how does we see operations kind of experience changed the way you would approach it? And will it?
Yes. Yeah. So I think there's a couple things. From being on this side, I've really learned definitively the difference between what's a great investment and what's a great company. As a founder or an operator in a business, like you just know what's like a great company, in terms of operating it, growing it, scaling it, you know, company culture, kind of all the things that are really important to you when you're working in a company. But when you're on this side, you're not just looking at this as a good company that's kind of on a particular, with all those same attributes I mentioned, but like, is it going after a large enough market? Is it scalable? Is the competitive landscape? Is this something that, I know, I can get X return, back on? So I think it's really given me, um, a lot of more insight in regards to potential problems to go after market size quickly. I mean, most of the time when we went after problems or things that I was solving, it was more like, it's kind of interesting as an idea. I want to go after it, try it. Something's failed, something succeeded, but like that was more kind of the approach. Though we validated the market and everything else, but not to the same degree. So yeah, that's kind of the approach I think I learned the most, is the difference between what's a good investment and what's a good, company. So
What are the main lessons and takeaways from your time in consumer electronics?
yeah, so consumer electronics, I think generally is probably one of the toughest areas, because not only are you dealing with kind of hardware and its own essence of hardware, but again, getting somebody to pay, significant amount of money in order to like buy that and then support that and kind of move forward, develop. Now there was also a whole software component to it with apps and connected to the device. So it's kind of a gamut of stuff. So I think what I learned is just really the principle of like, you can only control what you can control, and trying to like ship things, um, with the best of kind of your ability within the context of what you're doing. Like obviously with software, you can ship quicker. And so with apps and whatnot, we would ship quicker and more readily. Obviously hardware, we can only update it once to twice a year. So you just really understand kind of everybody's position and in the roles and the rules and their value behind it too. So
What are your thoughts? Just curious on Mark Anderson's premise of tech acceleration and everything tech. Are you inspired by the idea? Yeah, generally, your thoughts.
yeah, so I mean, I think ultimately, I think technology is like the greatest thing that's kind of, it's the single thing that makes humans like different than every other species, is their ability to essentially like create brand new technology that then makes our lives better and improves our ability to do things greater efficiency, etc. um so yeah, I'm a big believer that like tech is of course for good. Doesn't seem to mean that there isn't a downside or collateral damage to things. Of course there is. But I think in overall net positive, it's a net positive generally. And so the more where technology can help, alleviate and open markets, I think it's just like incredible. It doesn't mean always that technology is going to be implemented through a startup. It may be implemented through a nonprofit or, some sort of other form of organization that can kind of to solve that problem in a much better way, without the profit motive. But I think technology on an overall basis is a better is good for humanity.
I'm gonna be respectful of your time. We have 3 minutes, and I'm gonna try to pick up a couple of questions here, brief ones here. Do you invest in founders, tech, or both?
I think being a great founder or a founder that kind of knows their stuff and is going after something that they are passionate about and has an enduring vision for that is like table stakes. I think at the early stage, um, it's just a matter of like, then the next thing you'd have to pull in is like market, that you're going after, problem you're solving. Um, and so, yeah, I would say it's both, but I think table stakes is like being a great founder. No, I mean, you can have a great company, but if you're not a great founder, it's going to be very hard for you to like get the inertia required for it to mean anything for an investor.
What makes an executive a gold operator?
Um, I'm a big believer in like, when you're having people on your team, like making sure that you're always constantly like leveling up. So if you're somebody that's going above and beyond your role, identifying the core levers of within a company and trying to be as close to kind of the center of what that company is doing or their core function, you're going to have the best chance of essentially becoming a very effective and like important executive within the organization. Right. So like right now, if you're at Google, like you probably want to be as close to either search or their generative AI project, because like that's where the fate of the company is depending on. Though I think the team over there is not doing very good based on recent news. But yeah, so like wherever you are, you want to just be at the center of what the problem that they're going after, or the core of the business.
Rishi, always a thrill to feature you. Everybody watching, we have a lot of questions as I get to see the roles. It's mainly founders and sales leaders submitted the questions. We're gonna follow up with the recording, obviously, and yeah, just book one-on-one session with Rishi. Is available on the marketplace. Or you're most excited to coach with, mentor, just on a one-on-one basis.
Yeah, I mean, I'm excited to be, to work with, founders just generally that are going after stuff, especially like working with first-time founders, just simply because I feel like it can add the most value through my experience in helping them get through various hurdles that they're going through, and just have a different perspective. And I think that's kind of the way, yeah, I just love to help people as they are building something they're incredibly passionate about and going after big problems. So however I can do that and however I can help, feel free to reach out.
Pleasure featuring you. I'm gonna follow up and I'm gonna book a session. So thanks, Rishi.
Thanks.
Have a great one.
Bye.
Bye.